Now to the latest economic data that's showing job growth slowed for a third straight month in September. 661,000 jobs were added in the U.S. last month. The unemployment rate fell to 7.9%. Do these numbers lend more support for another round of stimulus? And what are they telling us about the state of the recovery? Joining me now is Tyler Goodspeed. He's acting chair of the Council of Economic Advisors. It's good to have you. Welcome.
Good to be here.
Do you support more stimulus to help this economy? Because I look at the number of permanent layoffs and the way that it's climbing and the fact that we're only kind of gotten half the jobs lost back, and you worry a little bit about what's coming in the months ahead.
Well, we certainly would, as always, have hoped to see a bigger monthly jobs gain in September. When we're looking at the data, what we see is that the private sector added 877,000 jobs in the month of September. Just to put that in perspective, pre-2020, that would have constituted the third biggest monthly jobs gain on record. And this is in the context of 9 states actually reversing reopening during the month of September, including the states of California, Texas, and Illinois. So the first, second, and fifth biggest state economies in the U.S. And a further 10 states were pausing reopening during the survey reference period. So I think it's important to bear in mind that context. We have now regained more than 50% of the jobs lost in those horrific months of March and April, but there is more work to be done. And the remaining 48% are certainly going to be harder than the first 52%. And that is why the administration remains committed to achieving a phase 4 deal that would include provisions like a reload of the Paycheck Protection Program, that would include a second round of economic impact payments, that would include support for airlines that have been really struggling. That's an industry that has been really struggling in this pandemic context. And we're very keen for movement on that front. And that my colleague, the Treasury Secretary, remains engaged and talks are continuing.
Let's talk about the labor market, where the job loss has gone to some extent from temporary job loss to more permanent job loss. And it makes sense. I mean, there are industries who it's obvious they're not going to need the kinds of workers that they had before this pandemic for possibly several years. So what happens to the workers who are let go from those industries? Do you think that they'll be able to find work in some of the other industries where there are still labor shortages? Do they need to be supported until they can go back to what they were doing previously? And how does that all bear on where the unemployment rate goes from here?
So the increase in permanent job losers in the month of September is definitely something that we were paying close attention to. Also, we saw that there was an increase in folks not in the labor force, although when we look at the underlying data, we see that many of those folks were not in the labor force because they hadn't actively searched for work in the past 4 weeks due to concerns about the pandemic. But definitely this is one of the reasons why we want a phase 4 agreement that would provide additional support to the economy, that would provide additional incentives for employee retention and net hiring. But here again, I think it's important to maintain some perspective. In just 2 months' time, we have reduced the unemployment rate from 10.2% to 7.9%. In the aftermath of the previous recession, 2008, 2009, it took more than 3 years. It took 3 years to reduce the unemployment rate from 10% in October 2009 to 7.9% in September 2012. So I think the speed of the recovery thus far has just been unprecedented, and we certainly want to maintain that pace and even accelerate it.
Yes, we need good speed, Mr. Goodspeed. Thank you for joining me, sir. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.